If we're going to build Wall Street 2.0, we can't just say forget about everything that we have. It's trillions of dollars worth of real world value. And so what you're seeing today is you're seeing stable coins, which are, they're igniting DeFi ecosystems. They're very institutional products, but they're also, anybody can hold them and transact them. They're compliant, but they're also, free flowing. You're starting to see DeFi applications that look more like TradFi. They're not about getting huge amounts of yield at very high risk, but they're about things that make a lot of sense to people, like treasuries.
Alrighty, everybody, what is going on? Welcome back to another CYPRX video banger. In today's video breakdown, we're going to continue to dive down the rabbit hole and show you that we are entering into an era where we're not going to have to sell our digital assets like XRP for fiat currency. And instead, we are going to be able to participate in the DeFi ecosystem to generate passive rewards. This video breakdown today is going to dive into some ongoing real-world asset tokenization taking place on the XRPL right now in this very moment for the first time ever in history, giving everyday average people equal access to the real estate market where we can generate passive rewards on real estate properties straight through a mobile device. So with that being said, we're going to jump into some fundamentals and some panel discussions starting here on this post that I made to you guys on X just the other day, where I said, smart people in the future will not sell their XRP. Instead, they will learn how to lend. They will learn how to borrow. They will learn how to provide liquidity, yield farm, liquid stake, and pay themselves passive rewards with their XRP. However, most influencers are still out there manipulating people into thinking that the smartest approach is to sell their XRP or other digital assets for fiat currency. Those influencers are still living in 2021. Surprisingly, this post got over 93,000 impressions, so hopefully people are waking up. After today's video breakdown, you will be awake and aware as to what is happening. So right now, we are in the midst of a massive war where you're going to continue to see things like this take place on social media that manipulates you, and it is because people are not doing the proper research. Here is an individual influencer. This is just a video that popped up on my feed today, and you can see the thumbnail. It says, "I'm losing faith in XRP. Why on earth, if you've actually done research on what Ripple, the XRPL, and what XRP is actually doing for the global economy, would you be losing faith in it?" And so in today's video breakdown, I'm going to show you all why you should ignore things like this to the fullest extent. Push it as far away from your algorithms as possible and tap into the research. So do you all remember this video breakdown, surprisingly still posted 9 days ago, only has 230 views. Listen to what Stacey Warden here said on stage at the 2025 AIM Summit about earning yield every single second of every single day up until the very last second that we spend, and earning yield on Lofty through real world asset tokenization. And I'm going to show you guys how on stage David Schwartz at a recent event that took place at the beginning of this year, the Ondo Summit, was talking about DeFi applications being built out on the XRPL. And now fast forward to more recent times, just a week ago, what was announced being built out, real world asset tokenization on real estate on the XRPL. Take a second and listen to what Stacey Warden here says, because this is going to continue to age so well.
So if I start with kind of 4 examples, I'll start then with the money example first. Why is it that your cash is not always earning yield for you? Why is that? Why do we tolerate that? I should be able to take that tiny sliver of an Aberdeen money market fund, and I should be able to hold it in my wallet. And when I go to, and I should be able to earn yield from my Aberdeen money market fund until I go into a cafe and I buy a cup of coffee. And when I get my latte, then Starbucks can start earning yield on my tiny sliver of my, what's a Starbucks latte now? $17? My $17 Starbucks latte, they can then earn yield on that. So that's the first thing. Like, you have to think about this like very futuristically. The second example is in these securitization vehicles, right? Like, there are a lot of intermediaries in securitization vehicles. You take a mortgage securitization, all that's happening there is a waterfall, right? A waterfall of investors. Some are getting the principal first, some are getting the interest, some take the first loss, some take the second. There's calculation agents that figure all of that out. No offense to any of the calculation agents in the room, right? But like, this can all be automated with smart contract-based money, programmable money, and tokenization of these underlying assets, right? calculation agents, paying agents, right? All of these guys, they take 30 to, 3 to 30, I don't know how many basis points off of a 3 to 4 basis points, let's call it, off of a mortgage. And, for $1 million mortgage, that can be $30,000, $40,000, right? It's real money. The third archetypal example is in, as I was saying earlier, illiquid assets, right? Like, having rental income is a very important way to diversify your portfolio income. I'm not talking about an in-law suite over your garage, right? I'm talking about a small apartment building. But, middle-class investors, they're not going to buy an apartment building, but they could buy a part of an apartment building. So there's a company building on Algorand called Lofty AI, and for as little as $50, you can be an owner of a rental property. Right? And what do you do as an owner of a rental property? You go to the Lofty AI website, where, by the way, it doesn't say Algorand, it doesn't say tokenization, it doesn't say blockchain anywhere on this website. But you get, the rental history, the tax records for the area, the property manager. They form little DAOs around each property, and they get rental income, to your point earlier, liquid, right? You don't get your rental income at the end of the month. You get it every day, your percentage of your ownership in that property.
All right, I'm going to pause it there, capitalize on what you said. Getting rental income every single day, talking about generating yield on your digital assets every single day up until the very last moment that you spend, right? And how building rental income is a very important way to diversify your yield earning potential in the near future. This is huge. And what she's saying only took place a few days ago at the London 2025 Summit. And I'm going to show you guys how all of this is being built out right now on the XRPL and why people like this should be ignored. Losing faith on the XRPL and XRP right now in this very moment in time in history is the most illogical thing to do, right? Why? Because things are happening for the first time ever, and you do not want to miss out. Shout out to my man, Mr. Aquaman, over here on the YouTube space for making this video, because in yesterday, he specifically talked about Lofty AI, and he talked about David Schwartz being on stage talking about real world asset tokenization and DeFi 2.0. So we're going to jump into something that David Schwartz here said in this particular video breakdown, sitting on stage with Sergey. First, I want you guys to listen to what Sergey says here about how DeFi is only going to become real with real world asset tokenization and making real things tokenized on chain, and specifically talks about how earning yield on real estate is part of that process. Take a second and listen, and then we're going to dive into the fundamental that just took place on the XRPL, showing you guys that all of this is happening right now in the moment. And then we'll end it with a video clip from David Schwartz himself, so that way nobody can deny that this is taking place.
I think the money market funds are experiencing an unexpected level of success because they diversify risk. If you are in crypto land and you look at things like Terra and why they fail, it's because they have lots of exposure to crypto stuff, right? Highly speculative crypto stuff. So it turns out that diversification is like a basic common sense thing that still happens and is useful on blockchains. So if you have a bunch of crypto stuff, maybe you want some non-crypto stuff on a blockchain. What's the most non-crypto thing you can think of? US Treasuries, right? So here's a US Treasury on chain, and it gets adoption and diversifies your risk and gives you, and also, well, depending on the one you have, gives you certain amounts of yield. The second thing I think is stuff you couldn't own before. So you couldn't own a private equity fund. You couldn't own a piece of real estate. You couldn't have fractional ownership of revenue from an art auction. You couldn't have, you couldn't experience ownership of something. Yeah. That second thing I think is gonna start going somewhere right about now, and that varies by geography, because different geographies vary. Real estate versus commodities versus owning different things that they want to own but couldn't own, and there's pent up demand for that ownership. And then the third category that I'm really excited about is getting me yield on things I can't get yield on, right? So let's say the very smart DeFi people in flip-flops are able to generate yield on the thing that the people in institutional suits couldn't, right? Like, let's say I can get yield on gold, right? That's pretty interesting, isn't it? So I think that the DeFi people that figure out how to create yield out of traditionally non-yield bearing assets are going to be super successful people. Like some of the most successful stuff will be that.
The most successful people, the most successful projects will be the people that figure out how to generate yield on things you couldn't naturally generate yield on in the past. And real estate is one of them, people. The threshold to enter into the real estate market for the everyday average person is so high. And now that is all fading into the background, where anybody with $50, a mobile phone, and an internet connection can participate in a $1 trillion real estate market. And you can do that right now on the XRPL. And he just specifically mentioned the level playing field, which, if you all have watched previous video breakdowns of ours here at CYPRX, we've been trying to get you guys to see that that is taking place. He specifically said people in flip-flops, the DeFi native people, operating on the same level playing field that the people in suits are operating on. So getting access to yield generating benefits with the same equal access that people in institutions are doing it on, right? And this is all happening on chain right now. So if you have not seen this fundamental post, all right, this is huge. And we're going to actually take a look at the website and read thoroughly through it. But this is an announcement that just took place about a week ago, launched today. The initiative, in collaboration with the Virtual Assets Regulatory Authority, or VARA, the Dubai Future Foundation, and PRIPCO, hopefully I'm pronouncing that correctly, marks a monumental step for asset tokenization in the future of property investments in the Emirates. As this designated tokenization provider for the project, CTRL Alt brings deep expertise in financial engineering and digital asset infrastructure. The DLD Control Alt have worked closely together on the development of a secure, compliant, tokenized framework, focusing on structuring, minting, and placing real estate title deed tokens on chain. The XRP Ledger, a decentralized layer 1 blockchain renowned for its decade-long reliability and stability in tokenizing and exchanging digital and real-world assets, has been selected as the blockchain for this project. Listen, this is massive. This enables fully integrated, transparent tokenization processes that align with local regulations and enhances investor confidence. This project has been developed under the Real Estate Evolution Space Initiative and marks the first time, I repeat again, the first time ever in the Middle East that a government real estate registration authority has implemented a public blockchain-based tokenization property title in deeds.
So if you have a bunch of crypto stuff, maybe you want some non-crypto stuff on a blockchain. What's the most non-crypto thing you can think of? US Treasuries, right? So here's a US Treasury on chain, and it gets adoption and diversifies as your risk and gives you, and also, well, depending on the one you have, gives you certain amounts of yield. The second thing I think is stuff you couldn't own before. So you couldn't own a private equity fund. You couldn't own a piece of real estate. You couldn't have fractional ownership of revenue from an art auction. You couldn't have, you couldn't experience ownership of something. Yeah. That second thing I think is gonna start going somewhere right about now.
With this move, the DLD is the leading charge toward a more accessible, transparent, and efficient real estate market, enabling fractional ownership, broadening investor participation, and enhancing operational efficiency. Do you all see how this is happening for the first time ever? So why on earth would you start to lose faith in XRP now, when now, built out on the XRPL, people can go and invest in real-world asset tokenization with very fractional sizes amounts of money? This is game changing, people. This should make you hype. This should make you freaking like ecstatic. This should get you off your seats. Like, oh my goodness gracious. Now, as an everyday average earning 9 to 5 individual with low income, I can now go and expand my portfolio and invest in real estate properties that I would never have been able to previously invest in without blockchain, without the XRPL, right? By leveraging native tokenization ownership of real estate, it has now been fractionalized, allowing multiple investors to co-own a single property. This is achieved through PRIPCO Mint Real Estate Platform, which is now live and allows investors to participate with a starting minimum investment of only 2,000 EID. I don't know how much that is, but yeah, that's probably not a lot of money compared to what was previously required. EID holders are able to participate at mint.crypto, that is such a tongue twister right there, .com. All right. This project initiative contributes to the growth of the AED $60 billion tokenized real estate market by 2033, an equivalent of 7% of Dubai's total property transactions. Ladies and gentlemen, smash that thumbs up button and subscribe. Honestly, if this doesn't get you off your seats, I don't know what else will. So if we come over here to the pripco.com website, okay, this is it right here. And I just want to thoroughly read through how simplistic this process is. And you can see right here in a mobile device, look at this. Remember what Stacey Warden was saying on stage. It says right here, total rental income, annual rental return. So you're literally earning yield right there on rental properties. This is, I mean, I keep saying this is massive, but hopefully if you have a brain, you're getting the picture. Going back to how I started off today's video breakdown, smart people will not sell their XRP. If you actually thoroughly watch Mr. Aquaman's video breakdown, where he talks about Lofty AI, well, in this video breakdown, he talks about also lending out your XRP, taking a loan out against it, so borrowing against it on the Metal X DEX, right? And going and buying real estate property and then tokenizing it and then putting it on Lofty or a platform maybe like Crypto, now that it operates on the XRPL, and tokenizing your real estate property and earning yield with it. This is game changing, and all through never having to sell your XRP for fiat to do so, right? If what I just said resonates with you, then tap in with us here in the Wealth 28 Club, because we have been saying these things for over a year now, and now they are all starting to finally materialize and come into fruition. I mean, this is massive. Nobody can deny this. And not only that, but it's regulated, people. This is regulated DeFi. So anybody out there that's like, oh, DeFi is not regulated. No, 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 it is. It says it right here. It is licensed right now in Dubai, right? So it's only a matter of time before it becomes regulated everywhere, because if not, the jurisdictions that don't allow this are going to simply fall behind. But look at how it says. It's really this simple. You, number one, buy. You browse our expertly curated portfolios and invest in tokenized Dubai properties with a minimum of AED 2000. So I don't know how much that is in United States dollars, but yeah, okay. Earn. Number two, you receive returns from monthly rental income and capital appreciation directly in your Pipeco Mint wallet. What? So you literally have to do nothing. There's no middleman. There's no documents and paperwork and all this bullcrap that you have to go through. The old, outdated, traditional system, it's done. It's done. This is, I mean, this gets me super excited, because as a real estate investor, having traditional real estate in my portfolio, this is game changing. This is absolutely game changing. No paperwork, no middleman, no nothing. Just straight buy, earn, and boom, sell. Easily sell your tokens on the Crypto Mint marketplace, offering faster and flexible transactions. And this is all built on the XRPL. Yet, just like Stacey Warden said, there's no announcement on this website that it's built on the XRPL. There's no XRPL logo, right? And so you have to understand that blockchain right now is in the process of being integrated into the back end, where normal, everyday, average people, they're not going to see the XRPL. They're not going to see that this is all built out on blockchain. They're just going to see these DeFi applications and they're going to utilize them. Why? Because it creates a level playing field that nobody's ever had access to. And you have these people on the internet that come up here and they yap because they made bad investment decisions, buying XRP at a premium, and then shortly after experiencing a 30% drawdown, thinking that crypto is a scam, when in reality, it's the inverse. Crypto is part of the new financial system, so is blockchain, and if you ignore that, you risk falling behind. Let's end today's video breakdown, because this stuff is so powerful, with David Schwartz here talking about DeFi applications and how they plan to enhance the savings account. And that's something that we have talked about in previous yield generation video breakdowns taking place right now. So take a second here and listen to what David Schwartz here has to say about how we are seeing DeFi applications accelerate.
David, you have seen the whole evolution of blockchain from early Bitcoin days and have been a co-creator of the XRP ledger. In your view, what do you see as the most significant difference between DeFi 1.0 and DeFi 2.0? And what do you think is needed for mainstream adoption?
Yeah, so thanks. Both myself and Ripple have been in this business for well more than 10 years now. We watched the very early stuff going, to what's happening now with institutional adoption. In the very beginning, it was very experimental, and it was almost like Las Vegas. It was gambling. It was very sexy, though. Like, you attract a lot of people to fancy casinos, but it doesn't have a whole lot of real-world utility. It's not Financial System 2.0. Financial System 2.0, a lot of it is frankly boring. Like, for most people, what they need is like a savings account is an extremely useful thing. It doesn't produce high yield. It isn't very volatile, but it's extremely useful and practical. And so we've watched that evolution to more useful, more practical, more enterprise-focused, more compliant. Compliance was a bad word in the early days. Like, everything was just completely decentralized. But the problem is the value is in the real world. If we're going to build Wall Street 2.0, we can't just say forget about everything that we have. It's trillions of dollars worth of real world value. And so what you're seeing today is you're seeing stable coins, which are, they're igniting DeFi ecosystems. They're very institutional products, but they're also, anybody can hold them and transact them. They're compliant, but they're also, free flowing. You're starting to see DeFi applications that look more like TradFi. They're not about getting huge amounts of yield at very high risk, but they're about things that make a lot of sense to people, like treasuries.
So I just wanted you all to hear David Schwartz himself say that we're seeing a massive maturation in the DeFi ecosystem where DeFi is starting to look a lot more like TradFi.
You're starting to see DeFi applications that look more like TradFi. They're not about getting huge amounts of yield at very high risk, but they're about things that make a lot of sense to people, like treasuries.
And now this is physical proof that what David Schwartz said, by the way, 3 months ago, because this video breakdown was posted 3 months ago, has 234 views. How embarrassing is that? And now we're seeing it materialize in real time on the XRPL. This was only posted a week ago. Real world asset tokenization, where individual users can come, they can invest in real estate properties that cost millions of dollars, if not hundreds of thousands of dollars, for minuscule amounts of money and start to earn yield directly through their mobile application, right? Game changing. So if you all enjoyed today's video breakdown, if you all want to learn how to utilize platforms like this, because we have DeFi mentors in the Wealth 28 Club community that host Zoom calls that go over how they are earning passive rewards through applications like this right now in the moment, then head over to CYPRXtrading.com. We'd love to have you on the team. And if not, then I encourage you guys to stop listening to the naysayers out there and really pay attention to what is happening. I didn't give you guys any bullish Moonboy Hopium targets or price predictions on XRP. Why? Because that stuff is irrelevant. It does not matter anymore. Why? Again, because we can now use our XRP to participate in the DeFi ecosystem, and it will only continue to mature and proliferize over the next consecutive couple of years. This is the level playing field that we've been waiting for, and you need to wake up and educate yourself. If you don't want to do that here in the CYPRX Wealth 28 Club, then go tap into the free material. You got the YouTube, you got the X, where we're constantly posting gems. As always, many blessings to you guys. The least you could do is smash that thumbs up button and subscribe to the platform. We do appreciate the love and the support, and I will see you all in the next video breakdown.